The market opened. EUR/USD position down $2,000. Gold trade hemorrhaged another 1,500. Hands trembling over the keyboard. Close it, hold it, add more. No plan, no rules, no command structure. Just another soldier lost in the fog of war. Sound familiar? Welcome to Trading Psychology Stick, where we transform emotional traders into strategic commanders. Quick disclaimer: this is psychological warfare training for the markets, not financial advice. Your results depend entirely on your discipline and execution. This isn't trading. This is gambling in uniform. It's entering Normandy without orders, fighting shadows without intelligence, firing weapons without targets. The market isn't your enemy, it's neutral terrain. But without command structure, you become your own worst enemy. Here's what most traders don't understand. The fog of war in trading manifests in 5 deadly ways. First, emotional decision-making under fire. Second, having no clear objectives beyond make money. Third, reactive positioning instead of strategic planning. Fourth, confusion between noise and signal. And fifth, the most lethal, friendly fire, where self-sabotage kills more traders than market moves ever could. Military strategists learned centuries ago that battles are won in the command room, not on the battlefield. Sun Tzu wrote, "Every battle is won before it is fought." Yet 90% of traders enter the market like soldiers without orders, commanders without strategy, armies without communication. Your current reality? You react to price like a private panicking under fire. You have weapons, those indicators on your screen, but no doctrine for using them. You have intelligence, all that news and analysis, but no framework for processing it. You have capital, your ammunition, but you spray it wildly hoping to hit something. The transformation begins now. From this moment, you're no longer infantry. You're promoted to command. Your first order: build a war room where chaos becomes strategy, where emotion becomes intelligence, where losses become lessons. The market will test you. It will probe for weakness. It will exploit every crack in your discipline. But commanders don't break under pressure. They've already planned for it. They've war-gamed every scenario. They've built systems that function when their emotions fail. Welcome to Strategic Trading Command. Your war room awaits construction. Chapter 2. Know Thyself. Build your command center. General Patton once said, "Know your enemy and know yourself." In trading, you are both. Before commanding armies, you must command yourself. Before building strategies, you must understand your nature. The market doesn't care about your personality, but your personality determines how you'll navigate the market. The 4 commander types exist because humans wage war differently. Understanding which one you are isn't just helpful, it's essential for survival. The Blitzkrieg commander, the scalper, lives for lightning warfare. Strike fast, strike hard, disappear. You thrive on adrenaline, make decisions in seconds, live for the immediate feedback. Your strength is speed, your weakness is impatience. 1-minute charts are your battlefield. If you've ever felt your heart race when entering a trade, if you check positions every 30 seconds, if waiting feels like torture, you might be a natural scalper. The siege commander operates like a patient mountain. Position traders see campaigns, not battles. Weekly charts reveal what daily noise obscures. You'll wait months for the perfect setup, then commit fully. Your strength is conviction. Your weakness is stubbornness. If you've ever held a position for weeks without flinching, if you find day trading exhausting, if you prefer researching to reacting, position trading might be your calling. The guerrilla commander thrives on adaptation. Swing traders are opportunistic, fluid, reading the battlefield's rhythm. You strike when the enemy overextends, retreat when they strengthen. Your strength is flexibility. Your weakness is lack of conviction. If you find yourself successful in different market conditions, if you can switch from bullish to bearish in a day, if rigid rules feel constraining, swing trading aligns with your nature. The systems commander knows wars are won by logistics, not heroics. Algorithmic traders trust mathematics over intuition, process over discretion. Your algorithms are your generals. Your strength is consistency. Your weakness is rigidity. If spreadsheets excite you, if you backtest obsessively, if you'd rather code than click, algorithmic trading might be your domain. Here's your discovery exercise. Don't skip this. Your trading life depends on it. Review your last 50 trades. When did you feel most confident? What time frames felt natural? Did you prefer quick strikes or patient campaigns? Were your wins from intuition or system? Building your command center requires 4 spaces. Physical space. Even Eisenhower needed a room. Designate your trading space. Remove distractions. This is where strategies are born and executed. Your environment shapes your psychology. Make it worthy of command. Mental space. Create pre-market rituals. Clear yesterday's battles. Today's war requires today's mind. A clear mind makes better decisions. Emotional space. Know your triggers. If losing your mother's birthday date in dollars tilts you, acknowledge it. Commanders have weaknesses. They just plan for them. Write down your top 3 emotional triggers. Post them where you trade. Awareness is armor. Technical space. Your tools must match your style. Scalpers need speed. Position traders need perspective. Don't bring a knife to a gunfight or a tank to a speedboat race. Align your platform, indicators, and time frames with your commander type. Remember, there's no superior style, only the style superior for you. The market rewards authenticity. Fight as yourself, not as someone else. Chapter 3. Battle Plans. Begin with purpose, establishing objectives. Commander, what's our objective? Make money. That's not an objective, soldier. That's a wish. Every failed trader shares this flaw, fighting without clear objectives. Real commanders define victory before entering battle. What's yours? The strategic objective framework breaks down into 3 categories, and you need all 3. Financial objectives move beyond get rich to specifics. Generate X dollars monthly income by Y date. Build account from X to Y dollars in Z months. Replace salary within 18 months. Create retirement fund alternative. Numbers, dates, accountability. But here's what most miss. Financial objectives alone lead to burnout. Lifestyle. Objectives protect your humanity. Trade 2 hours daily, not 12. Location independence within 1 year. Reduce financial stress, not multiply it. Build wealth without sacrificing health. Because what good is $1 million if you're too sick or stressed to enjoy it? Skill objectives ensure continuous growth. Master 3 specific setups completely. Achieve 60% win rate on A+ trades. Reduce emotional trades to less than 10%. Build systematic approach to markets. Skills compound. Money comes and goes. Skills stay forever. Here's the mission statement exercise that revolutionized my trading. Write yours now. By specific date, I will specific achievement through method while maintaining values and limits. Example. By December 2025, I will generate $5,000 monthly trading income through swing trading Forex majors while never risking more than 2% per trade or trading more than 3 hours daily. Post this everywhere. Make it your phone wallpaper, your computer background, your bathroom mirror. Let it guide every trading decision. Choosing your battlefield matters more than most realize. Not all wars are worth fighting. Not all markets suit all commanders. The asset selection matrix helps you choose wisely. Forex offers 24-hour warfare, leverage available, technical paradise, perfect for blitzkrieg and guerrilla commanders. Stocks provide fundamental stories, sector dynamics, opening gaps, ideal for siege commanders who love research. Futures deliver pure price action, high leverage, professional arena, the system's commander's playground. Crypto presents the Wild West, 27 availability, extreme volatility. For those who thrive in chaos, match battlefield to personality. Need action? Choose Forex or futures. Like research? Stocks call your name. Want volatility? Crypto awaits. Prefer stability? Major indices offer peace. Resource assessment reveals your true arsenal. Capital is your ammunition. Never fight with scared money. Time is your most precious resource. How many hours can you realistically dedicate? Knowledge forms your intelligence network. What do you actually understand? Technology provides your weapon systems. Is your setup adequate? Support includes your allies. Does your family understand this journey? The campaign timeline prevents the overnight success delusion. Wars aren't won in days. Plan your progression realistically. Months 1 through 3 focus on basic training through demo trading. Months 4 through 6 involve small live fire exercises. Months 7 through 12 see increasing engagement. Year 2 launches full campaign mode. Without objectives, you're not trading. You're wandering the battlefield, hoping to stumble upon victory. Hope is not a strategy. Planning is. Phase 2, Deployment, Strategic Battlefield Entry. Chapter 4, Entry Rules, the Marching Orders. No battle plan survives contact with the enemy. Helmuth von Moltke said this, and he was right. But entering battle without a plan guarantees defeat. Your entry rules are your marching orders, clear, specific, non-negotiable. They transform you from reactive soldier to strategic commander. The entry doctrine transforms hope into strategy. Rule 1, the confluence principle. Never attack with a single unit. In the military, we call this combined arms warfare. In trading, it's confluence. Technical signal acts as your scout's report. Price patterns, indicator readings, chart structures. Volume confirmation shows enemy movement. Are the big players accumulating or distributing? Market structure reveals favorable terrain. Is the trend your friend or foe? Risk-reward above 3-to-1 ensures acceptable casualties. Never enter a battle where victory pays less than defeat costs. 1 signal equals 25% confidence. 2 signals equal 50% confidence. 3 signals equal 75% confidence. 4 signals equal engage. Rule 2, the ambush setup. The best entries catch the market off guard. You're not chasing price. You're waiting where price will arrive. False breakout reversals trap the weak hands. Support large resistance tests reveal true intention. Trend continuation pullbacks offer discount prices. Opening range breakouts capture momentum. Rule 3, the time window doctrine. Each market has its rhythm, and trading against it is like attacking uphill. London Open, 800 to 1000 GMT, is when Forex majors awaken. New York Open, 1330 to 1530 GMT, delivers maximum liquidity. Asia session activates yen pairs. Avoid lunch hours. Even soldiers need rest. The pre-entry checklist saved my account more times than I can count. Market structure analyzed. Are we seeing higher highs and lows? Key levels identified. Where are the support and resistance zones? Volume patterns confirmed. Who's in control, buyers or sellers? News calendar checked. Any incoming bombs? Position size calculated. How many troops to deploy? Stop loss determined. Where's your retreat point? Target identified. What's the objective? Mental state verified. Are you emotionally combat ready? The entry execution protocol follows 4 phases. Alert phase, setup approaching. Prepare but don't anticipate. This is where amateurs fail. They see potential and jump. Professionals see potential and wait. Confirmation phase, all signals align, safety off. This is your moment of truth. Either your rules are met or they aren't. No interpretation, no close enough. Binary decision. Execution phase, enter at market or limit. No hesitation. When your rules say enter, you enter. Period. Hesitation kills more profits than bad analysis. Documentation phase, screenshot setup, record reasoning. This becomes your trading encyclopedia. Future you will thank, present you. Common entry mistakes, what I call court-martial offenses, will destroy your account. Entering on hope sounds like it looks like it might go up. Hope belongs in church, not charts. FOMO entries scream, everyone else is winning. Everyone else is probably losing. Revenge entries growl, I'll get my money back. The market doesn't have your money. Your poor decisions gave it away. Boredom entries whisper, I need some action. If you need action, go to a casino. News gambling shouts, this has to move it. News is noise. Price is truth. Remember, amateur traders enter because they think something will happen. Professional commanders enter because their rules say to enter. The market doesn't care about your opinion. It respects your discipline. Chapter 5. Exit Rules. The Order to Retreat. He who fights and runs away lives to fight another day. Ancient military wisdom that most traders ignore until it's too late. Entries make you feel smart. Exits make you money. The graveyards of trading are filled with soldiers who knew when to attack but not when to retreat. They held positions like desperate last stands, hoping for reinforcements that never came. They turned winning positions into losing ones, small losses into account killers, profitable campaigns into Pyrrhic victories. The exit doctrine provides 3 paths to safety and mastering all 3 separates survivors from casualties. Path 1. The victory exit, target achieved. This should be your favorite exit, yet most traders sabotage it. Predetermined profit targets remove emotion from the equation. Scaled exits maximize both profit and probability. 50% off at 1R, 25% at 2R, 25% trailing. Never turn winners into losers. This is the cardinal sin of trading. Book profits systematically, not emotionally. Path 2. The strategic retreat, stop loss. Your stop loss is not defeat, it's tactical preservation. Think of it as insurance, not failure. Set it before entry. No negotiation under fire. When bullets are flying, soldiers don't renegotiate retreat points. Base it on structure, not dollar amounts. The market doesn't care about your risk tolerance. Never move it away from price, only toward. This rule has no exceptions. Honor it immediately. No one more candle. That candle could burn your account. Path 3. The tactical withdrawal, time or condition. Exit. Sometimes the best exit is when nothing happens. War teaches us that waiting costs resources. Time-based exits. If no movement in 10 candles, exit. Condition-based exits. If support breaks, exit. News-based exits. Exit all positions before Fed. Session-based exits. Never hold through weekends. In the green zone, when winning, trail stops using market structure. Take partial profits at resistance. Never let winners become losers. This bears repeating because it's that important. Exit if momentum dies. Dead trades tie up capital and mental energy. In the yellow zone, that break-even area, move stop to break-even ASAP. Consider scaling out half. Watch for reversal signals. Protect capital above all. Break-even is not failure, it's intelligence. In the red zone, when losing, honor your original stop loss. No averaging down. That's doubling down on failure. No hope, no prayers. Exit and analyze later. The market will be there tomorrow. Will your account? The psychology of strategic exits reveals why this is so hard. Exits hurt. Every exit feels wrong. Winning exits trigger, I left money on the table. Losing exits sting with, it reversed right after. Break-even exits frustrate with waste of time. This is your ego talking, not your commander. Commanders think in campaigns, not battles. One exit doesn't define your trading. Your exit discipline does. Exit drills build muscle memory. Practice until automatic. Enter position on demo. Set all exit orders immediately. Walk away for 1 hour. Return and evaluate. Repeat 100 times. Yes, 100. Excellence requires repetition. The exit mindset revolution. Stops aren't losses. They're insurance premiums protecting your account from catastrophe. Targets aren't limitations. They're objectives preventing greed from hijacking logic. Exits aren't failures. They're completions of the trading cycle. Master your exits. They determine whether you'll trade for months or decades. Niobe Chapter 6. Position sizing. Deploying the right number of troops. Napoleon lost at Waterloo, not because he lacked soldiers, but because he deployed them poorly. In trading, position sizing is your troop deployment. Too few, and you win nothing. Too many, and you risk annihilation. The 2% rule serves as your maximum casualty protocol. Never risk more than 2% of your army in a single battle. On a $10,000 account, that's $200 maximum risk per trade. On a $50,000 account, $1,000. On a $100,000 account, $2,000. This isn't about being fearful. It's about surviving to fight. You can be wrong 20 times in a row and still have 60% of your capital. Try that risking 10% per trade. You'll be done in 7 losses. The position size formula transforms confusion into clarity. Position size equals risk amount divided by entry minus stop loss. Example that changed how I think. Account $10,000. Risk 2% equals $200. Entry at 1,000. Stop at 1.0950. That's 50 pips. Position. Size, $200 divided by 50 pips equals $4 per pip. Simple math. Profound impact. Yet most traders position size by feel. This looks good, I'll go bigger. That's not trading. That's gambling with extra steps. The confidence-based sizing model recognizes not all setups are created equal. Your A-plus setups with perfect conditions get 2% risk. B-plus setups with good conditions get 1.5% risk. B setups that are merely acceptable get 1% risk. C setups, don't take them. Ever. This model transformed my trading. Instead of trying to make money on everything, I wait for A-plus setups in size appropriately. Quality over quantity. Precision over spray and pray. The market condition multiplier adapts to battlefield conditions. In trending markets, use normal size. The wind is at your back. In choppy markets, reduce by 50%. You're fighting in fog. During high volatility, reduce by 25%. The battlefield is chaos. Before news events, reduce or avoid entirely. Incoming artillery. Friday afternoons, half-size maximum. Soldiers are tired. The scaling strategy builds competence progressively. Start small, prove yourself, then grow. Months 1 through 3. 0.5% risk maximum. Months 4 through 6. 1% risk maximum. Months 7 through 12. 1.5% risk maximum. Year 2 and beyond. 2% risk maximum. I fought this initially. I'll never get rich risking 0.5%. Then I did the math. Growing a $10,000 account to $100,000 requires a mere 25% annual return for 10 years. Achievable with discipline. Try growing a $0 account to anything. Impossible. The correlation defense prevents hidden concentration risk. Never put all troops in one battlefield. EUR USD long plus GBP USD long equals double exposure to USD weakness. Gold long plus USD short represents correlated risk. Maximum 3 correlated positions ever. Total heat never exceeds 6%. Position sizing mistakes, fatal errors will end your trading career. The all-in mentality. 1 loss equals account dead. Revenge sizing, doubling after losses compounds failure. Celebration sizing, increasing after wins feeds overconfidence. Random sizing, no consistency equals no edge. Ignoring correlation. Hidden concentration risk emerges in crisis. The psychology of proper sizing challenges your ego. Small sizes feel frustrating. Remember, you're building an army, not gambling on a single battle. Every general started as a lieutenant. Every empire began with a single victory. Warren Buffett said, "Rule number 1, never lose money. Rule number 2, never forget rule number 1. Position sizing is how you implement this wisdom. Phase 3. Counterintelligence. Detecting internal saboteurs. Chapter 7. Emotional saboteurs. The traitors in your ranks. The enemy isn't in the market. The enemy infiltrated your command center long ago. They wear your uniform, speak your language, and sabotage every campaign from within. Meet your internal saboteurs. Agent FOMO, fear of missing out, is the most seductive saboteur. Profile. Whispers of missed fortunes. Shows you others' profits on social media. Creates urgency where none exists. Makes every move look like the last train to wealth. Signature move. Everyone's making money except you. Enter now. You see price running. Your chest tightens. Fingers hover over the buy button. Logic screams no, but FOMO screams louder. Damage report. Causes premature entries at resistance. Oversized positions from desperation. Abandoned rules because this time is different. Neutralization. I don't need every move. I need my moves. Write this. Post it. Live it. The market offers opportunities every day. Missing one means nothing. Taking the wrong one means everything. Agent revenge, the wounded ego, activates after losses. Profile. Your ego in combat gear demands immediate retaliation. Transforms disciplined trader into reckless gambler. Takes losses personally. Seeks payback emotionally. Signature move. Double down. We'll show the market who's boss. You just lost. The market took your money. Now it's personal. Revenge loads the cannon with twice the ammunition, aims at the same target that just defeated you. Damage report. Turn small losses into account killers. The market doesn't care about your anger. It just takes more money. Neutralization. The market didn't take my money personally. I won't give it back emotionally. After any loss exceeding 1%, step away. 24-hour minimum. The market will be there tomorrow. Your capital might not be if you trade angry today. Agent Greed, the corrupt general, turns winning positions into losing ones. Profile, never satisfied, always wants more, moves targets, ignores exit signals, believes every winner should be a home run. Signature move, just a few more pips, move that target, you're up 2. R, plan says exit. Greed says, look at that trend. This could be a 10R trade, so you hold, and watch profit evaporate. Damage report, transforms victories into defeats. Trends end. Greed doesn't see it coming. Neutralization, pigs get fat, hogs get slaughtered. I take what's offered. When you hit your target, celebrate. Take the win, bank the profit. Another setup comes tomorrow. Greed makes you forget this simple truth. Agent Hope, the delusional optimist, prevents strategic retreats. Profile, ignores reality, sees reversal patterns and randomness, believes in miracles over mathematics, keeps you in losing trades far too long. Signature move, it'll come back. Just hold a bit longer. Price hits your stop level. But wait, is that a support level? Maybe news will save it. Perhaps if you just give it more room. Damage report. Small losses become catastrophic. Hope is expensive. Reality is profitable. Neutralization. Hope is not a strategy. I trade reality, not wishes. When price hits your stop, you exit. Period. No negotiation, no interpretation. Price is truth. Hope is delusion. Agent Fear, the paralysis officer, creates hesitation at crucial moments. Profile, magnifies every risk, minimizes every reward, shows you all the ways you could lose, hides all the ways you could win. Signature move, what if you're wrong? Better wait. Perfect setup appears, all rules confirmed, but fear whispers about the last loss, the possible failure, the what-ifs that paralyze action. Damage report, missed opportunities, half-hearted executions. Fear costs more than losses ever could. In trades not taken when rules said, take them. Neutralization, I trust my rules over my emotions. Fear is just information. Feel the fear, document it, then execute your rules anyway. Fear keeps you alert. Don't let it keep you poor. Detection systems act as your early warning. Emotional check before each trade. What am I feeling? Heart rate monitoring during trading. Is my body responding to opportunity or threat? Trade journal emotion column. Which saboteur influenced this trade? Post-trade emotional audit. Who was in command, me or them? These saboteurs never leave. They're part of being human. But once you know their faces, hear their voices, recognize their tactics, they lose their power. Chapter 8. Circuit breakers, the emergency defense system. Every military base has fail-safes. When breached, automatic protocols engage. Your trading needs the same protection, not from the market, but from yourself in compromised states. The circuit breaker system serves as your automated defense grid. Think of it as your trading immune system, detecting threats and responding automatically before infection spreads. Level 1. Daily loss limits. Yellow alert. Trigger, down 3% in a single day. Response, reduce position size by 50%. Duration, remainder of trading day. Purpose, prevent tilt escalation. This saved me last month. 2 losses put me down 2.8%. Old me would have gone bigger to recover. Circuit breaker me traded half size, took a small win, preserved capital. The market doesn't care about your daily P&L. Your circuit breaker does. At level 2, consecutive loss. Protocol, orange alert. Trigger, 3 losing trades in a row. Response, stop trading for 24 hours. Duration, 1 full trading day. Purpose, break emotional momentum. Maybe it's you, maybe it's the market. Doesn't matter. Step away. I've never regretted honoring this rule. I've always regretted breaking it. Level 3. Weekly drawdown defense. Red alert. Trigger. Down 6% for the week. Response. Demo trading only. Duration. Until next Monday. Purpose. Preserve capital and reset psychology. This feels extreme until it saves you from a 20% drawdown. When you're down 6%, you're not thinking clearly. You're wounded. Wounded soldiers need medical attention, not more combat. Level 4. Monthly maximum loss. Black alert. Trigger. down 10% for the month. Response, complete trading halt. Duration, minimum 1-week review period. Purpose, prevent account destruction. If you're down 10%, something is systematically wrong. Your strategy, your psychology, or the market environment. Full stop required. Diagnose, adjust, recover, then return. The implementation protocol makes circuit breakers work. Step 1, write your limits. Post them visibly in your war room where you can't ignore them. Set broker alerts if possible. Technology doesn't negotiate with emotions. Tell someone who will hold you accountable, your spouse, your mentor, someone who cares more about your survival than your pride. Step 2, prepare response plans. When circuit breaker triggers, immediately close all positions. No, just let this one play out. Step away from screens. Physical distance prevents emotional decisions. Document what happened. Write while it's fresh. Begin recovery protocol. Don't skip this. Your body holds the stress. Release it. Mental. Review rules, not trades. Focus on process, not outcomes. Emotional. Journal feelings honestly. Name the saboteurs that appeared. Strategic. Identify what broke down. System flaw or execution flaw. The tilt detection system provides early warning signs you're compromised. Checking positions every 30 seconds means anxiety is driving. Calculating P&L obsessively means results are controlling you. Feeling physical tension or stress means your body knows what your mind denies. Arguing with the market mentally means you've made it personal. Wanting to just get back to break-even means revenge is commanding. The psychology of circuit breakers challenges your ego. They feel like failure. They're not. They're strategic preservation. Think of them as airbags in a crash. You hope to never need them, but they save lives. Immune system fighting infection, temporary discomfort prevents permanent damage. Sprinklers preventing total fire damage, better wet than burned. Backup generators during power failure, keeping critical systems running. The non-negotiable nature defines circuit breakers. They work only if they're automatic. The moment you negotiate, they're useless. Your compromised self cannot judge your compromised state. That's why you built these rules when thinking clearly, to protect you when you're not. Your circuit breakers are your last line of defense. Honor them like your trading life depends on it, because it does. Release it. Phase 4, Operations, Automating Command Systems. Chapter 9, The Playbook System, your Strategic Operations Manual. Every elite military unit has SOPs, Standard Operating Procedures. Your playbook is your trading SOP, transforming discretionary chaos into systematic success. Building your trading playbook starts with documentation, not perfection. The setup documentation template captures everything. Setup name. Give it personality. The ambush reversal sticks better than pattern 3. Market conditions. Define precisely when this setup works. Trending market with clear structure, not when it looks good. Time frame. Primary for analysis, secondary for execution. 4H primary, 1H execution. No ambiguity. Indicators. List exactly what you use. 20 EMA, volume, RSI divergence, not some moving average. Entry criteria must be binary, met or not met. Price touches major support, joshed resistance. Rejection candle forms, pin bar or engulfing. Volume spike on rejection. RSI divergence present. Risk jot reward. Minimum 1 to 3. Entry execution removes discretion. Limit order at 50% retracement of rejection candle. Stop loss below, above rejection candle, low, high. Target 1 at previous swing point. Target 2 at measured move projection. Management rules guide the trade life cycle. Move stop to break even at 1R profit. Take 50% off at target 1. Trail remainder with 20 EMA. Historical performance provides reality check. Win rate, 64% from 32 wins, 18 losses. Average, win 2.4R. Average loss, 0.9R. Expectancy, plus 0.87R per trade. This level of detail feels excessive until you're in a trade. Then it becomes salvation. The playbook development process takes time. Accept this. Phase 1, Discovery, months 1 through 3. Test 20 plus different setups. Document everything meticulously. No real money yet. This is research, not trading. Find what resonates with your style. Phase 2. Refinement. Months 4 through 6. Narrow to 5 to 7 best setups. Backtest each 100 plus times minimum. Forward test on demo. Calculate exact statistics. This phase separates dreamers from traders. Phase 3. Specialization. Months 7 through 12. Master 3 to 5 core setups. Trade only these setups, nothing else. Refine rules based on results. Build unconscious competence. This phase builds confidence through repetition. Phase 4. Evolution. Year 2 and beyond. Add new setups slowly, one at a time. Retire underperforming ones without emotion. Adapt to market changes. Maintain edge continuously. The A+ trade criteria identifies your best opportunities. Not all setups are equal. Define your best. Perfect technical alignment. Ideal market conditions. Your highest confidence. Best historical performance. These get maximum position size and focus. Everything else gets less or gets passed. The Playbook mindset shift revolutionizes your trading from what should I trade today to what setups are presenting today. From I think this might work to this matches setup number 3 perfectly. From every trade is different to I've seen this pattern 147 times. Common Playbook mistakes will tempt you. Too many setups create confusion. Too few setups miss opportunities. Vague rules enable interpretation errors. No statistics means flying blind. Never updating ignores market evolution. Bruce Lee said, I fear not the man who has practiced 10,000 kicks once, but I fear the man who has practiced one kick 10,000 times. Your playbook makes you that dangerous. When setup number 3 appears, you don't analyze. You don't hesitate. You execute. The thinking happened long ago. Now there's only discipline. Your playbook becomes your trading DNA. It's not just what you trade, it's who you are as a trader. Build it carefully. Refine it constantly. Trust it completely. Chapter 10. AI-powered rule assistants. Your digital command staff. Modern warfare isn't man versus machine. It's man with machine. Your trading command center needs digital officers working 24/7, never tiring, never emotional, never missing signals. Your AI command staff structure mirrors military organization. The reconnaissance officer handles market scanning. Trading view screeners running continuously, searching for your exact setups. Custom alerts for setup conditions. When opportunity knocks, you answer. Multi-time frame confluence detection. What looks good on one time frame confirmed on others. Volume anomaly identification. Unusual activity often precedes moves. Mission. Alert commander when battle conditions align. The intelligence analyst provides pattern recognition. AI-powered pattern detection sees what human eyes miss. Historical probability calculation. This pattern worked 67% over 1,000 instances. Correlation analysis. When gold rises and dollar falls, what happens to EUR/USD? Sentiment aggregation. What's the crowd thinking and why they're probably wrong? Mission. Transform data into actionable intelligence. The compliance officer enforces rules. Entry checklist automation. Every trade meets all criteria or doesn't happen. Position size calculator. Emotion never determines size. Math does. Stop loss enforcement. Orders placed automatically. No negotiation possible. Circuit breaker monitoring. When limits hit, trading stops. Period. Mission. Ensure all trades meet command protocols. The communications director manages alert systems. Webhook integrations connect everything. Telegram, Discord notifications reach you anywhere. Email summaries provide daily briefings. Voice alerts for critical events ensure you never miss priority setups. Mission, keep commander informed anywhere, anytime. Implementation roadmap makes this practical, not theoretical. Week 1, basic alert system. Start simple, master basics. Trading view. Alert. Example, RSI crosses above 30, and price touches 200 EMA and volume greater than 20 period average times, 1.5. Week 2, automated analysis. ChatGPT becomes your analyst. Prompt. Template. Analyze this setup. Screenshot. Check for trend alignment, support, wash, resistance, volume patterns, risk, reward. Rate confidence 1 to 10. Suggest position size based on 2% risk. Week 3. Integration platform. Connect everything. Zapier, IFTTT connections link your tools. TradingView to Telegram. Pipeline delivers alerts instantly. Automated journal entries document every trade. End-of-day report generation summarizes performance. No manual work. No missed data. Python scripts for backtesting test strategies across years and minutes. API connections for execution remove emotional interference. Machine learning for pattern improvement evolves your edge. Custom dashboard creation visualizes everything that matters. The human-AI partnership principles define roles clearly. AI handles what it does best. Scanning never misses a setup. Alerting never sleeps or takes breaks. Calculating never makes math errors. Recording never forgets details. Human handles what requires judgment. Deciding, context always matters. Adapting, markets change, strategies must follow. Learning, experience counts more than data. Innovating, creativity wins long term. Critical warnings from expensive experience. AI assists, never replaces judgment. The moment you let AI make decisions, you've abdicated command. Backtest all automated systems. What works in theory might fail in practice. Have manual overrides always. Technology fails. You need control. Monitor for technical failures. Systems break. Have contingencies. Update regularly for market changes. Yesterday's edge might be today's disaster. The practical setup. Guide starts where you are. Minimum viable stack costs less than a dinner out. TradingView Pro at $15 monthly. ChatGPT Plus at $20 monthly. Telegram free for alerts. Basic webhook service free tier. Total $35 monthly for professional capabilities. Don't fear technology. Embrace it. Your competition already has. The question isn't whether to use AI assistants, it's how quickly you can implement them. You command the machines, they don't command you. Keep that hierarchy clear, and technology becomes your greatest ally. Phase Phasives, Strategic Evolution, Adaptation and Growth. Chapter 11, Debrief Rituals, Learning from Every Battle. The general who wins a battle makes many calculations in his temple before the battle is fought. Sun Tzu wrote this. But the general who wins the WR learns from every battle fought. Most traders never review their trades. They repeat the same mistakes for years, wondering why results don't improve. The after-action review. Protocol transforms experience into education. Daily debrief takes 10 minutes. Non-negotiable. Set a timer. Do it immediately after closing your platform. The objective review asks 4 questions. What was planned? Write your pre-market intention. What actually happened? Document reality, not interpretation. Where did they diverge? Identify the gap. Why did they diverge? Find the root cause. The 3 questions drive improvement. What went right? Reinforce successful behaviors. What went wrong? Repair broken processes. What was missing? Refine your approach. The grade assignment rates process, not profit. Entry execution, A through F. Exit execution, A through F. Rule A adherence, A through F. Emotional control, A through F. Profitable trades with F grades teach bad habits. Losing trades with A grades build excellence. Weekly War Council takes 30 minutes. Schedule it. Protect it. This meeting with yourself generates compound returns. Statistics review reveals truth. Win rate versus plan. Are you hitting targets? Average RR achieved. Is reality matching expectation? Largest win, loss. Are extremes controlled? Time in trades. Are you patient or anxious? Emotional violations. Which saboteur appears most? Pattern recognition finds hidden edges. Best performing setups. Double down here. Worst performing setups. Eliminate or refine. Best trading times. When are you sharpest? Problematic patterns. What triggers mistakes? Emotional triggers. What sets off saboteurs? Strategic adjustments prevent stagnation. Rules to tighten. Where are you too loose? Rules to loosen. Where are you too rigid? Setups to add, remove. What's working, what's not. Size adjustments needed. Should you trade bigger or smaller? New market conditions. How are markets evolving? Monthly command assessment requires 2 hours. Deep dive into everything. The journal entry template captures wisdom. Date and time stamp everything. Setup type from your playbook. Entry price, time, and exact reason. Exit price, time, and exact reason. Result in R multiples, not dollars. Grade A through F for process. Emotions experienced: calm, anxious, greedy, fearful. Lessons learned: what this trade taught you. Improvements: what you'll do differently. The visual review: process makes patterns obvious. Screenshot everything. Entry moment across all time frames. Management decisions when they happen. Exit moment for review. Result overview for perspective. The brutal honesty requirement separates professionals from pretenders. Common lies we tell ourselves need confronting. The stop hunt got me usually means poor stop placement. I was right. Just early means wrong. Almost worked means didn't work. Bad luck means bad process. Market was wrong means you were wrong. Market is never wrong. The learning acceleration formula changed my trajectory. Experience equals trades multiplied by reflection. 100 trades with no reflection equals 1 lesson. 10 trades with deep reflection equals 10 lessons. Which path builds mastery faster? The evolution. Mindset reframes everything. Losses are tuition payments. What did you learn? Mistakes are curriculum. Study them. Repetition is the teacher. Practice makes permanent. Improvement is the degree, gradual but certain. Every trade teaches if you're willing to learn. Skip the gym. Skip meals if you must. Never skip your debrief. Your future trading self will thank your present reviewing self. The market charges tuition either way. The question is, will you collect your education? Chapter 12. Backtesting Battlegrounds, Training in Safe Terrain. Train hard, fight easy. Every military follows this axiom. Yet most traders fight hard because they never trained at all. Before risking real capital in live combat, commanders train in simulations. Backtesting is your simulation chamber, where mistakes cost nothing but teach everything. The backtesting battalion structure provides 2 approaches, both essential. Manual backtesting builds intuition. Tools: TradingView replay mode, Forex tester, manual screenshots. Purpose: develop pattern recognition, timing, management skills. Process: select random date ranges. Trade your playbook setups only. Record every decision. Calculate actual statistics. Compare to live results. This feels tedious because it is. Excellence requires tedium. Michael Jordan shot thousands of free throws in empty gyms. You'll trade hundreds of setups in market replay. Same principle, same results. Automated backtesting validates systems. Tools: Python, MetaTrader, TradingView, PineScript. Process: code exact. Entry exit rules. Run across 5+ years, data minimum. Analyze different market conditions. Optimize carefully. Avoid curve fitting. Forward test before live deployment. The statistical significance requirement prevents gambling on small samples. Minimum sample sizes matter. Scalping: 1,000+ trades. Day trading: 500+ trades. Swing trading: 200+ trades. Position trading: 100+ trades. Without statistical significance, you're gambling on randomness. Flip a coin 10 times, might get 7 heads. Flip it 1,000 times, approaches 50-50. Your strategy needs similar sample size to reveal true edge. The market condition. Matrix tests robustness. Test across all environments. Markets don't stay constant. Trending up, bull paradise. Your strategy prints money here, everyone's does. Trending down, bear feast. Still profitable, good sign. Ranging, chop zone. Surviving here separates pros from amateurs. High volatility, storm conditions. Can you navigate chaos? Low volatility, dead seas. patience profitable here? Your system must survive all conditions or specify which to avoid. Only trade trending markets is valid. Works in all markets is usually delusion. The backtesting reality check humbles overconfidence. Common delusions need confronting. 300% annual returns means curve fitted. 95% win rate means picking tops, jockey bottoms retroactively. No losing months means insufficient data. Works on all pairs means over-optimized. Reality adjustments bring truth. Reduce backtest results by 30% for real-world slippage. Add commission, I spread, slippage to every trade. Include news event gaps that testing misses. Account for emotional deviation. You won't execute perfectly. Consider market evolution. What worked in 2010 might fail today. The forward testing bridge connects theory to reality. Before live trading, follow this sequence. Demo trade for 3 months minimum. Match back-tested results within 20%. Handle emotional pressure of real trades. Execute flawlessly 50+ times. Build true confidence through repetition. The Monte Carlo stress test reveals worst-case scenarios. Run 1,000 random sequences of your trades. Examine best-case scenario. How good could it get? Worst-case scenario. Can you survive this? Most likely scenario. Your realistic expectation. Maximum drawdown possible. Your deepest valley. Risk of ruin calculation. Probability of account death. If you can't survive the worst case, adjust position sizing. Better paranoid than poor. The evolution testing keeps you current. Markets change, systems degrade, test regularly. Skip back testing and you're gambling. Complete back testing and you're trading. The market doesn't care which you choose. Your account balance will. Chapter 13. Adaptive Rules. Evolution through market seasons. No plan survives contact with the enemy, but no soldier survives without the ability to adapt. Markets evolve. Edges decay. Commanders who don't adapt become casualties of yesterday's war. The market season recognition system identifies where we are in the cycle. Spring markets show accumulation. Low volatility marks professional buying. Tight ranges frustrate retail traders. Professional accumulation happens quietly. Breakout setups build like coiled springs. Adapt. Reduce size. Widen stops. Patience premium. This isn't the time for heroes. Summer markets bring trending conditions. Clear direction emerges from spring's base. Momentum strong and sustained. Trend-following paradise arrives. Pullback entries golden. Adapt. Increase size. Trail aggressively. Ride winners. This is harvest season. Fall markets reveal distribution. Volatile tops confuse participants. Professionals selling to eager buyers. False breakouts common. Reversal setups emerge. Adapt. Take profits quickly. Watch for turns. Winter approaches. Winter markets deliver decline and chaos. High volatility shakes out weak hands. Panic selling creates opportunities. Correlations break down. Survival mode required. Adapt. Reduce exposure. Widen stops. Preserve capital. Spring will return. The adaptation framework operates on 3 levels. Level 1. Tactical adaptations happen daily. Volatility adjustments to position size. ATR changes. Sizing changes. Session-specific strategies. London requires different approach than New York. News calendar awareness, NFP. Friday isn't normal. Friday, correlation monitoring. When everything moves together, reduce exposure. Level 2. Strategic adaptations occur weekly. Market regime identification, trending or ranging. Setup emphasis shifts. Which patterns working now? Risk parameter adjustments, tighter or looser stops. Time frame modifications, shorter or longer holds. Level 3. Systematic adaptations evolve monthly. Playbook updates, adding what works, removing what doesn't. New pattern integration, markets create new opportunities. Old pattern retirement, saying goodbye without emotion. Technology upgrades, better tools, better results. The edge degradation reality hits every strategy eventually. Every edge has a life cycle worth understanding. Discovery, you find something special. Exploitation, you profit consistently. Saturation, others find it too. Degradation, Edge weakens noticeably. Death no longer works. Monitor your edges constantly. What worked in 2020 may kill accounts in 2024. The market is an adaptive system. When enough traders exploit an edge, the edge disappears. The adaptation indicators warn of needed changes. Warning signs appear before disaster. Win rate declining steadily despite good execution. Average RR deteriorating from previous levels. More failed setups that looked perfect. Stops hit more frequently than historically. Profits harder to capture even in winners. Response protocol prevents panic. Identify what changed, market or method. Test adaptations in sim before risking capital. Implement gradually. Evolution, not revolution. Monitor results closely with detailed records. Be willing to abandon if necessary. The innovation imperative drives continuous improvement. Stagnation equals death in adaptive systems. The flexible rules framework separates core from tactical. Core rules never change. Risk management protects capital always. Position sizing prevents catastrophic loss. Circuit breakers stop emotional spirals. Journal discipline drives improvement. These are your constitution. Tactical rules adjust monthly. Specific setups match current conditions. Entry timing adapts to volatility. Exit targets reflect market behavior. Market selection follows opportunity. These are your tactics. Darwin didn't say the strongest survive. He said the most adaptable do. In trading, adaptation isn't just advantage, it's survival. The market evolved while you read this. Will you? Phase X. Legacy. The Infinite Campaign. Chapter 14. Antifragile Command. Building Unstoppable Operations. What doesn't kill you makes you stronger is wrong. What doesn't kill you doesn't kill you, unless you're anti-fragile. Then chaos makes you stronger. The anti-fragile trading architecture has 3 levels. Traditional trader remains fragile, needs winning to survive. One black swan equals death, hates volatility, prays for predictability. Result, eventually breaks. Risk-managed trader becomes robust, survives losses, weathers storms, tolerates volatility, maintains status quo. Result, survives but doesn't thrive. Better than fragile but missing opportunity in chaos. Anti-fragile commander thrives on disorder, gains from disorder. Black swans equal opportunity, feeds on volatility, thrives in chaos. Result, stronger after every crisis. This transformation changed everything. The barbell portfolio construction builds anti-fragility practically. Safe Fortress holds 90%. Core positions with tight stops. Proven strategies only. Conservative position sizing. Capital preservation focus. Purpose. Survive anything. This is your foundation. Boring, reliable, essential. Chaos hunters risk 10%. Black swan positions with massive upside. Asymmetric risk-reward setups. Small size, huge potential. Options, breakouts, events. Purpose, profit from extremes. This is your opportunity engine. The anti-fragile mindset shifts. Transform your relationship with uncertainty. From, I hope markets stay calm, to, I profit from both calm and chaos. From, losses weaken me, to, losses teach me and make me stronger. From, I need to be right, to, I need to survive and capitalize. From, protect me from volatility, to, feed me volatility for breakfast. Building anti-fragile systems requires 4 principles. Redundancy over efficiency. Multiple strategies for different conditions. Various time frames to catch different moves. Different markets for diversification. Diverse approaches prevent single-point failure. Options over obligations. Right to trade, not need. Multiple income streams beyond trading. No desperation trades from financial pressure. Choice from strength, not necessity. Small frequent stressors. Regular small losses build immunity. Constant learning prevents stagnation. Daily challenges strengthen discipline. Continuous adaptation ensures evolution. Skin in the game. Trade your own money for real feedback. Feel every loss to learn faster. Celebrate every win to build confidence. Own every decision completely. The convexity principle creates favorable asymmetry. Limited downside, unlimited upside structures. Risk $100 to make $1,000. Many small losses, few huge wins. Negative events limited by stops. Positive events uncapped by targets. The Antifragile daily practice builds strength systematically. Morning. Question. What could go wrong today? Prepare for multiple scenarios. Set protective stops everywhere. Identify opportunities in chaos. Ready for anything. Evening. Question. What made me stronger? Lessons from losses build wisdom. Insights from wins build confidence. Adaptation opportunities build evolution. Growth measurement builds momentum. I don't fear market chaos. I harness it. Every crash teaches. Every spike rewards. Every flat period builds discipline. My system doesn't just survive disorder. It requires it. Fragile traders fear tomorrow. Robust traders endure tomorrow. I anticipate tomorrow with excitement. This is anti-fragility. This is my edge. Chapter 15. The Grand Strategy. Infinite Game Mastery. Finite players play to win. Infinite players play to keep playing. Most traders play finite games. Win today, beat the market, get rich quick. Masters play infinite games, evolve continuously, outlast everyone, compound forever. The finite versus infinite paradigm reveals two different games entirely. Finite trading haunts amateurs. Goal, beat the market this month. Metric, P&L drives every decision. Mindset, competition against others. Result, burnout or blowout inevitable. Timeline, weeks to months before failure. Infinite trading defines masters. Goal, trade profitably forever. Metric, process perfection matters most. Mindset, evolution over conquest. Result, compound growth naturally. Timeline, decades of development. The 5 pillars of infinite trading build lasting success. Pillar 1, sustainable systems. Over maximum returns, 20% annually for 20 years beats 200%, then zero. Consistency over heroics every time. Base hits over home runs, survival over conquest. The tortoise beats the hare in real life. Pillar 2, process wealth over monetary wealth. Rich in discipline beats rich in dollars. Wealthy in wisdom compounds forever. Abundant in adaptation survives all markets. Prosperous in peace sleeps soundly. True wealth isn't what you have, it's who you become. Pillar 3, teaching to learn. Document everything for clarity. Share insights freely for growth. Mentor others for understanding. Build community for support. Teaching forces mastery. You think you know until you try explaining. Pillar 4, evolution over perfection. 1% better daily compounds remarkably. Continuous refinement beats sporadic effort. Embrace change as opportunity. Never complete, always improving. Perfection is the enemy of progress. Pillar 5, purpose beyond profit. Trading funds life, not vice versa. Money is tool, not goal. Freedom is target, not millions. Impact is legacy, not account size. When purpose drives process, profit follows naturally. The Infinite Commander's calendar structures sustainable growth. Daily, process perfection. Did I follow my rules? Weekly, system refinement. What needs adjusting? Monthly, strategic evolution. How are markets changing? Quarterly, life integration. Check. Is trading serving my life? Yearly, legacy building. What am I creating beyond profits? The paradoxes of mastery guide everything. Care less to earn more. Desperation repels profits. Trade less to profit more. Quality beats quantity. Know more to act less. Expertise simplifies. Detach to engage fully. Emotion clouds judgment. Surrender to win. Control is illusion. Your infinite game scorecard measures true success. Rate yourself quarterly on what matters. Health maintained or improved. Trading shouldn't cost wellness. Relationships strengthened. Success alone tastes bitter. Knowledge expanded. Markets teach endlessly. Systems refined. Evolution never stops. Peace increased. Stress indicates error. Purpose clarified. Why defines how. Legacy building. Impact outlasts profits. True wealth includes all 7. Money without the rest is poverty. The Master's daily ritual creates sustainable excellence. Dawn, gratitude for another trading day. Opportunity, not obligation. Morning, Process over profit focus, excellence in execution. Trading, execution without attachment. Results don't define worth. Evening, learning from all outcomes. Every trade teaches. Night, peace regardless of P&L. Tomorrow brings new chances. The infinite game's ultimate secret. When you no longer need to win, you can't lose. When trading becomes expression rather than desperation, profit becomes byproduct rather than purpose. When you play to play forever, you've already won. I am no longer trying to beat the market. I am dancing with it. Every day is practice. Every trade is teaching. Every outcome is perfect for my evolution. I don't trade to live. I live a life that includes trading. My legacy isn't in my returns, but in my refinement. Not in my profits, but in my peace. I play the infinite game where there are no losers, only those still playing and those who stopped. This is infinite mastery. Welcome to the infinite game. Welcome to true mastery. Welcome to the rest of your trading life. The market awaits your next move. Make it with the wisdom of a commander, the discipline of a warrior, and the patience of a master. Your war room is ready. Your systems are built. Your mind is prepared. Now go forth and trade. Not like a soldier seeking glory, but like a commander building legacy.